JSW Cement has just announced 11,000 crore in new capex. So this is not expansion, this is an invasion. Because companies don't spend this kind of money unless a super cycle is building beneath the surface. So the real question is India entering the biggest cement demand cycle of the decade? Now, what is JSW Cement actually doing? JSW Cement is doubling its capacity, expanding grinding units, strengthening clinker production, entering new regional markets, targeting national scale. So this is not a small capex. This is a full-blown land grab. And now the biggest question is, why is the cement demand rising so aggressively? So there are three silent engines. First is the infra boom. So highways, metros, bridges, all are cement heavy. Second, housing cycle. So post COVID, there is huge demand and urbanization effect. Thirdly, industrial capex. So there are factories, warehouse, data center. So this is India's strongest multi-sector cement usage phase in 15 plus years. So what exactly is a cement super cycle? Now, a super cycle begins with a case where demand keeps rising, supply keeps expanding, pricing becomes stable, capacity addition creates entry barriers. So a true cycle means long-term visibility, high utilization, and margin safety. Now, cement is boring, but in a super cycle, cement becomes well. Now, why is JSW's 11,000 crore move a massive signal? JSW is not guessing. They know exactly what's coming. Government infra push till 2030, largest housing demand in India's history. There is lower corporate tax regime. There is cheap green power integration, and there are cost control advantages. So, what does this capex says? We want to dominate before the super cycle peaks. Now, there are always hidden risks, and the investor must consider these. There is regional oversupply, there is high transport cost volatility, there is coal and petcoke dependency, there are price wars with Ultratech and Shree Cement, and there are execution delays. So cement is safe, but poor execution will destroy the shareholder value. So what can the smart investors track? They can track the capacity utilization, EBITDA per ton, regional price trend, expansion timeline, and fuel mixture. And they can ignore multi-bagger cement shock, one quarter spike, and small regional play. So this cycle rewards scale, not hype. So JSW Cement's 11,000 crore capex signals India is preparing for a cement demand explosion. Infra, housing, and manufacturing are aligning, and this is not a temporary spike. This is a rare multi-year cement super cycle forming in real time. If you want clean sector cycle analysis, real fundamentals, not hype, early signals of wealth cycle, infrastructure and capex themes decoded, subscribe to Insider Monk. Here we are not chasing stocks, we are chasing cycles. Thank you.